So do you think you need $50,000 saved to buy a house in Utah? That outdated myth is stopping way too many people from owning their dream home. So in this video, I'll break down the real numbers so you know exactly what you need to buy a home in Utah without the guesswork. So let's start by busting the biggest myth, that you need a 20% down payment to buy a home. That's just not true. In fact, many first-time buyers in Utah use specialized loan programs to get into a home for as little as 0 down to 3.5% down. Yeah, you heard me right. Some buyers are getting into a home with no down payment. Here are the most common options using different types of loans. Keep in mind that a good mortgage professional can guide you to the best options available. So let's start with FHA loans. Now, FHA loans tend to be more forgiving or less stringent with your credit score, as well as they're more flexible with your debt to income ratio. Now, what this means is a home buyer can get loans for as little as 3.5% down payment of the purchase price. Now, unique to Utah, and for those that are eligible, there are also supplemental FHA loan programs, for example, administered by the Utah Housing Corporation, that can assist home buyers with purchasing a home with 0 down, as well as help a home buyer with their closing cost, which I'll touch on this in a little bit later in this video. However, a downside to this type of a loan is that it will require what is called primary mortgage insurance for the lifetime of the loan. That can drive the lifetime loan costs higher over the term of the loan. So basically, an FHA loan might be better if you have lower credit scores and or higher debt amounts like student loans, car loans, or other types of debt. So keep that in mind. Next up is the conventional loan. Conventional loans tend to have lower long-term costs, meaning you can eventually remove the primary mortgage insurance premium when you achieve a 20% equity in your home. So your home ownership costs will go down or can go down over time. Conventional loans also have higher loan limits. They allow for more property type purchases, like for example, second homes and investment properties. Also, they don't require an upfront mortgage insurance premium at closing, unlike FHA loans, and they tend to offer better and more flexible loan terms. So this could be another great option for you depending on your situation. Now, there are 2 other loan types that might be helpful if you're eligible, and that would include if you're eligible for your veteran benefits, or if you live in what is considered a rural area. If you're eligible for veteran benefits, a VA loan might be your best option. Veterans can get into a home with as little as nothing down without mortgage insurance, believe it or not. And these loans do tend to require better credit scores to qualify. And then the last one is a USDA loan, and they are one of the best kept secrets in home financing, especially for buyers looking outside the metro areas in Utah, including parts of, for example, like Tooele, Wasatch, and Utah counties. And they're backed by the U.S. Department of Agriculture. They're designed to help people buy homes in rural, and this is something that's important, suburban areas with a 0 down payment. Here's what makes them unique. 0 down payment options are offered with lower mortgage insurance costs, they're competitive interest rates, and flexible credit guidelines, as well as they can be combined with Utah assistance programs. Now again, this loan type is best for home buyers looking in rural or qualified suburban communities. So that gives you a home buyer loan breakdown. So now let's talk about closing costs, because this is something that doesn't get considered very often. Closing costs are fees for things like title work, lender fees, as well as taxes. Now in Utah, closing costs do vary, and they're usually in the range of about 2% to 5% of the home price. So for example, on a $500,000 home, that could be $10,000 to $25,000. Sometimes closing costs can come as a surprise to home buyers when they get focused on just the down payment. But there are options available to help with these types of closing costs as well. So with the help of an experienced real estate agent, some of these costs can actually be negotiated by getting the seller or the lender to help cover them. So again, like getting help with FHA, VA, or USDA loan down payments, the Utah Housing Corporation has a program to assist with closing costs as well if you're eligible. Now next up are earnest money deposits, appraisals, and inspections. Now all of these items, they're typically paid up front when the action takes place. So for example, when your offer on a home gets accepted, whatever earnest money deposit you agreed to will need to be paid up front. When your appraisal is ordered, for example, you'll need to pay that up front. And likewise, when the home inspection gets completed, you'll need to pay for that out of pocket as well. Now, earnest money deposits, they're ultimately up to you and the seller, but on average, they tend to be right around 1% of the purchase price. There's no hard set and rule. So for example, that would be a $4,000 amount on the purchase of a $400,000 home as an example, but this is very negotiable. And it's important to note here that whatever amount is decided on counts toward your down payment. So let's say that you're planning on putting $10,000 down on your home purchase, and you decide to include a $4,000 earnest money deposit. Well, rather than having to come up with a total of $14,000, which is the $4,000 earnest money deposit and a $10,000 down payment to close, you'll just actually need $6,000 at closing because the earnest money would be applied toward your down payment. Now, beyond that, appraisals typically cost $500 to $800. Inspections are usually $300 to $500, and both again are paid out of pocket. Additionally, you'll need to consider what are referred to as prepaid costs and escrow charges. So when you meet to sign your final closing documents, you'll likely be required to pay for a few months worth of taxes and home insurance up front. And this helps basically your lender set up your escrow account and ensure that there will be enough money, for example, in reserve to cover those costs and those expenses when they come due in the future. And this can vary greatly depending on the time of year that your purchase takes place, but your lending professional, they can help you with this estimate so you know what your costs are up front. You might expect, $2,000 to $4,000 for this as a general idea. Also, there are some extras to consider that very few people even talk about, and that would be things like moving costs, new furniture, potential renovating expenses, as well as deposits for utilities. Lastly, there are Utah-based programs, like I mentioned, like the Utah Housing Corporation. There's a first home program, or there are even city-specific grants that can help cover your down payment or closing costs. Just ask your lender what's available, and they should be able to direct you to that. So what's the bottom line, for example, for a $500,000 home, while keeping in mind that this can vary greatly with some good negotiation and assistance programs? Let's go through an example. Let's say you decide to come up with a 3% down payment on your $500,000 home purchase. So that would be $15,000. Next, let's say your real estate agent was able to negotiate getting the seller to contribute 1% toward your total 3% of closing costs. So you'll need to pay $10,000 at closing, or the remaining 2%, while the seller is going to contribute $5,000, right? When you made your original offer on the house, You and the seller agree to a $1,000 earnest money deposit. So this amount would count toward the $15,000 down payment. And you would need to, again, pay that up front when the offer is accepted. So this means that rather than having to pay $15,000 at closing, because you already paid the $1,000, you would only have to come up with now $14,000 at closing for the down payment. Also think about your inspection cost. Again, that could have a variety of ranges in price. Let's just say it's $500. So your appraisal on top of your home inspection, let's say both of them at $500, and then your prepaid costs total $2,000. So if you add all that together, that roughly would come out to be about $28,000 total. And I know this is a lot of money for most people, especially first-time home buyers, but keep in mind that with some good negotiation and utilizing the right financing options, this amount could go way down or be different. Okay, there are a number of critical things to consider, as you can see. So in the next video, I'm going to cover the top 5 things to look for when buying a house. So take a moment to jump over there and check it out, but keep in mind that these are some important things when you're considering what you have to come out with, out of pocket with, for buying a home. All right. See you over there in a moment.